You know, as day traders, we live and die by the chart, right? It's all about that split-second price action. So what if I told you that a tool that's usually for slow, long-term investing, fundamental analysis, could actually be a secret weapon for those super fast trades? Today, we're going to dig into how understanding the why behind a stock's big move can give you a really powerful edge.
In the trading world, it really feels like you have to pick a team. You're either a fundamental analyst, buried in company reports, or you're a technical trader, glued to the charts. The conventional wisdom says these two worlds just don't mix. But what if that's not true? What if the real advantage comes from building a bridge between them?
So let's just make sure we're on the same page. When we talk about the fundamentals, in the classic sense, what are we really talking about?
At its core, fundamental analysis is all about looking past the daily market noise. It's like ignoring the flashy paint job on a car and actually popping the hood to see how solid the engine is. It's about a company's real financial engine.
And what are they looking for under that hood? Well, they're digging into all sorts of stuff. Earnings reports, press releases, balance sheets. They're asking the really important questions. How much debt does this company have? Is their cash flow actually healthy? You know, every single metric is another piece of the puzzle to tell the company's whole financial story.
And traditionally, the entire reason for doing this deep dive is to figure out what a company might be worth in the long run. This is really for investors who are planning to hold a stock for months or even years, not for somebody making trades in minutes.
Okay, so fundamentals are for the long haul, and that creates a huge problem for day traders. Why? Because in the short term, the market just seems to play by its own set of rules.
This really gets to the heart of it. A stock can be irrationally strong or weak, totally ignoring what the fundamentals are saying. You can have a great company and its stock tanks for a day, or a struggling company and its stock soars. And this is exactly why most day traders just say, forget it, I'm sticking to the charts.
So that leads us to the critical question, right? If the market is so nuts in the short term, why on earth should a day trader, someone who lives and breathes those short-term moves, even care about fundamentals at all?
This is where we completely flip the script. For a day trader, the goal is not finding long-term value. The goal is to hunt for short-term catalysts. You're not trying to figure out the company's health for next year. You're looking for what's going to make that stock move in the next 10 minutes.
Let's define exactly what we mean by a catalyst here. It's basically any piece of fundamental info, a news headline, an economic report that acts like a trigger, causing a sudden big jolt in a stock's price.
You've seen this happen a million times. A stock suddenly jumps, say, 5% right at the market open. What's the first thing you do? You look for the news. That headline you find, a surprise earnings beat, a new product getting announced. That is the fundamental catalyst creating a live trading opportunity, right here, right now.
So how do you actually find these catalysts? Well, we can break it down into a simple toolkit. There are really 3 key areas that you should be watching all the time. First up, earnings reports. Don't just look at the raw numbers. You're looking for the surprise. A big beat or a major miss is what really creates that wild intraday volatility. Second, news releases. We're talking about game changers like mergers, new product launches, or big contracts. These are the things that cause those sudden, sharp price spikes or drops. And finally, sector trends. Sometimes the biggest news isn't about just one company, but about an entire industry. A new piece of tech or a government regulation can create a wave of momentum that lifts or sinks a whole bunch of related stocks.
Okay, now that you know what to look for, there is one golden rule you absolutely have to remember. This is probably the most important part of fitting this all into a real trading strategy.
Think of it this way. The fundamental catalyst gives you the context. It gives you the reason, the why behind the crazy price action you're seeing on your screen. It helps you figure out if this is a real move with a story behind it.
But, and this is so important, your technical analysis, your charts, and your patterns, that still tells you what to do. The technicals are what help you decide when to get in, how to manage the trade, and where to put your stop loss. And that's really the bottom line. You use fundamentals to support your technical setups, to add an extra layer of confidence and understanding. You never ever let them replace your charts. The chart is still king.
So, let's just boil this all down to the one single insight that's the most powerful.
Just remember this, for a day trader, fundamentals aren't about a company's value 5 years from now. It's about finding the news, the data, the catalyst that's going to create volatility in the next 5 minutes. So as you get ready for your next trading session, I'm going to leave you with this question. Instead of just looking at the charts, what fundamental catalyst will you be watching for tomorrow?